Peer-to-peer lending. There was a major problem with peer-to-peer lending. I mean, this all goes on over the internet and all that sort of stuff. And the trouble is that the way the tax system is, and it's quite deliberate, the government or the revenue authorities do not like individuals trading as loan providers. They don't like you to have a trade of providing finance. And the reason they don't like it is because if you lose money, you get to set it off against your income. Okay, there are now restrictions on, the physical amounts you can offset each year and all the rest of it. But this is obviously a real problem because the whole way that peer-to-peer lending works is you're going to lose some of the money. That's just the way it's going to work because it's a basket type approach. You throw a load of money out, you win some, you lose some. That's just the nature of it. And what was happening, of course, is all these people were being taxed on their profits and getting no relief at all for anything they lose, which is frankly unfair. So what they've done is that they've given a measure of relief. They're not going to allow you to offset your losses against your general income. What they are going to do is allow you to set your losses against your income from peer-to-peer lending. So you just sort of put it in a box, which is sensible. It just means that you stand to lose that capital. You can't set that capital loss against anything else, but you can at least get some measure of relief for it. So it seems sensible. Seems sensible to me anyway. It's a welcome relief. Farmers averaging. I don't know whether there are any farmers in the room, but farmers' income is very volatile. And for ages they've been able to, in effect, average their profits. So when they have a good year followed by a bad year or a bad year followed by a good year, they sort of pay tax on half profits all the time rather than having to pay a large amount in one year because, of course, you pay your tax in arrears. So you have a good year, then you have a really bad year, but you're paying tax on the year and all that. So it's a problem. So what they're going to allow is 5 years averaging. So you have this rolling average that you'll calculate. So you average out your tax payments and average out your income if you're a farmer. Banks, compensation payments not to be tax deductible. Hoorah, they say. The net result of that will, of course, be large provisions for compensation. Well, it won't be actually. I mean, basically, they're putting this now in akin to a fine. A lot of us, if we do something wrong, if you commit a driving offence, a parking offence or anything else like that, you do something you shouldn't have done, you don't get tax relief for it. But the banks, of course, were getting relief for compensation payments for mis-selling. And they won't. I don't think it's backdated, it's only future. And I suspect the horse is probably well and truly bolted by now. At least I hope it has, because otherwise there's something else to come out. But they're not going to be tax deductible in future. Offshore tax evasion. This is really getting quite serious. There will be a new ability for, and I think they will use it, for the revenue to come to people like me and say, give us the names of all your clients that have offshore bank accounts. And we will have to provide it. Now, in the past, they would have had to go to court, get a court order, and they would have to have reasonable grounds, and there would have to be reason to suspect somebody had done something, all the rest of it. They won't anymore. And that will apply to us, it will apply to financial intermediaries. They get all this information anyway from lots of people. But, of course, if we knew a client had an offshore bank account, it would be on their tax return. So it's not a problem to us, of course. But for other people, it may be more of an issue. So the net is tightening. There will be new offences to do with offshore evasion, new criminal offences. I heard the Chancellor being interviewed on Radio 4 just as I was coming here about one of his government colleagues who was chairman of a bank in Switzerland that may have been subject to the new criminal sanctions. But of course he didn't respond to that. So the net is tightening, and frankly, if you do have an offshore bank account, you need to do something about it pretty damn quick. Otherwise you're going to end up in a lot of trouble. Employment intermediaries. there will be a new consultation. For years, there has been a whole industry around reducing tax by converting what otherwise would be ordinary earnings into subsistence or travel payments. So certain classes of worker, they could be truck drivers, they could be security guards, this kind of stuff, but it is much wider than that as well. In effect, their taxable income was reduced by converting some of that income into payments for expenses. And they probably were legitimate expenses because people have to travel to get to work and all the rest of it. But for most of us, travel to work is not tax deductible. But you were able, through a series of devices, to make that tax deductible. They finally, and the way the tax system worked is that a lot of these people were not in the tax net before these systems were created. So the revenue sort of accepted this was a way of getting people into the tax net and taking some tax rather than none, but they've had enough now. I think they've had enough, and they're basically going to try once and for all. They've had IR35, IR30 for years and years and years, all kinds of devices, all kinds of things, and they've had, actually, I think they've now had enough. And they're going to consult on ways of basically just getting rid of the whole practice, which means an end to a whole industry. Offshore tax, I talked about offshore bank accounts. There is a series of offshore disclosure regimes, Liechtenstein being one of them, quite favourable. Whereas if you managed to get within it, you paid a sort of a guaranteed fairly low penalty, as well as interest on your disclosures. They're going to bring those to an end early. And they're going to give a final chance, a final amnesty in the next couple of years with a 30% penalty attached to it. And I think that really will be the final chance. Thereafter, I suspect if they catch anyone with offshore income or bank accounts which are not being disclosed, it will be straight to jail. And I don't think there'll be any messing. Digital tax account. The abolition of self-assessment tax returns. Okay. Well, of course, this is really very, very worrying. The government collects a lot of information about all of us. It knows what interest we get from UK banks. It knows, it takes a little while to get it, but it does know very often what income and what money we have in offshore bank accounts as well. What the government's going to do is, in effect, set up a central depository. They already have it on their own records for each of us. And the financial institutions and employers, for their payroll and all the rest of it, will send data into the revenue. And it will all be posted into this account for you. Now, the revenue already have this for you. They already see this. When you send in your self-assessment tax return, they have this information. What they're going to do is turn it into a more customer-friendly database, which you will be able to see, and you will be able to add to. And when you've finished adding to it for a year, that will in effect be your tax return, because the computer will then work it out. If that was the end of it, that would be great. What they're proposing is to allow you to connect your accounting software for your business to the government's database, so you can also input your company accounts to it, transaction by transaction. Can you imagine? Can you imagine explaining your journal entries at the end of the year to the tax inspector every year? Peter, you're looking very worried. You've gone pale. But this is where we're going. This is the frightening thing about it, is that there won't be any self-assessment tax returns. There'll just be this database in which you put all your information. Okay, well, agents will still do it for you and all the rest of it. That's a given. For most people, that's not a problem. All they have is maybe a pension, a bit of earned income, a bit of bank deposit. And that's fine, absolutely fine, no issue with that. And the government can get the right figures and correct everything. And you can see it as a taxpayer and you can complain about it. But we have the problem even now where we get information about people's state pensions come through on our software, direct from the government database, and it can be wrong. Changing it is a major problem. So they can make mistakes, and the concept of us putting our accounting records direct into the government's database is just staggering. At the moment it will be voluntary, but I can imagine it being well, it's good for me, I suppose. It's employment for me, isn't it? Sorting it all out when it all goes wrong.